Welcome. In this video, will Xcn coin price start to rally? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structures on the chart is a clearly defined ascending channel formation. These types of patterns are important technical setups that indicate price movements are continuing in a stable direction and that a strong trend is in place. In the current chart being analyzed, it is observed that the price has pulled back to the lower boundary of this ascending channel and is now searching for a reaction at this level. Lower boundaries within ascending channels often act as areas of consolidation, or zones where the market regains strength. These regions typically serve as strategic support points, where buyers become active and prices begin to move upward again. Past reactions from these levels have repeatedly shown that prices can advance back to the midline or even the upper boundary of the channel. Therefore, the current price level could potentially mark the beginning of a new upward move. In such channel formations, reactions from the lower boundary usually reflect a certain level of confidence among market participants, suggesting that the price will continue to remain within the channel. When the price hits the lower band and bounces upward, it indicates that this confidence has been restored and that traders recognize this level as strong support. In this case, the price is likely to first target the midline of the channel and eventually the upper boundary. The structure currently being observed provides valuable insights not only from a technical analysis perspective, but also in terms of market psychology. Lower channel boundaries are often considered opportunity zones. Investors aim to buy at these levels to benefit from a potential upward move. This increases buying pressure and can drive the price back toward the higher levels within the channel, especially if there is a noticeable increase in volume while the price remains near the lower boundary. It is a strong indication that buying interest is returning. If the price bounces upward with volume support, the move is expected to be more sustainable and powerful. In such a scenario, the first target is typically the midline of the channel. The midline represents the average price zone within the channel and often acts as a short-term resistance area. However, if this level is broken with volume, the price movement could quickly continue toward the upper boundary. Looking at past price behavior, similar channel structures have often resulted in significant rallies following reactions from the lower band. Therefore, technically speaking, the current price level holds critical importance. If a strong reaction occurs here, it may not just be a short-term rebound, but also a continuation of a larger bullish trend. Another important point to watch is whether the price holds this lower boundary instead of breaking below it. Multiple tests of the lower boundary without a breakdown confirm strong buyer presence and reinforce the validity of this area as a solid support line. This also implies a higher potential for upward movement. Additionally, if the price forms a base at its current level and consolidates to build a strong foundation, the resulting uptrend is likely to be healthier. A rise built on a solid base tends to be more stable and long-lasting than a sudden spike. Such base formation increases investor confidence and further supports the price's upward potential. However, we can't rely on channel analysis alone to make a decision. So let's take a look at the other metrics as well. Stay tuned. Upon close examination of the chart, it is observed that the market is in the process of forming a W pattern, a classic and powerful technical structure. This formation, especially when it appears at bottom levels, is considered a potential reversal signal by investors. The W pattern, also known as a double bottom, indicates that downward pressure is beginning to ease and that buyers are gradually gaining strength. The current price position points to one of the most critical parts of this pattern, the second bottom. This level provides a highly suitable foundation for buyers to re-enter and for the price to gain upward momentum. The price pausing at the second bottom is a strong signal that selling pressure is slowing and that the market is seeking a new direction. A recovery at this level, along with renewed buyer strength, could lead not just to a short-term bounce, but also to the completion of the W pattern and the beginning of a larger upward move. If the price starts to move upward from this level, a rally toward the neckline of the pattern is likely. If that neckline is broken, as frequently seen in technical analysis, the W formation will be considered complete, potentially triggering a strong move toward target levels. One of the most important characteristics of the W pattern is that it represents a phase in which confidence in the market is being rebuilt. The rise after the first bottom shows that buyers are beginning to step in, while the second bottom serves as a test of their conviction. If the second bottom occurs at the same level or higher and is followed by a strong upward move, it is evidence that buyers are starting to take control. The current price level could therefore be a turning point for the market. An upward move from this point would not only signal the technical completion of the pattern, but also help restore investor confidence from a psychological perspective. These types of structures often mark the beginning of a trend reversal. And once the pattern is complete, a new trend may begin. If the price gains upward momentum from the second bottom, the pattern's target is generally calculated by projecting the distance between the neckline and the bottom upward, offering significant upside potential. Volume plays an important role in the successful completion of such patterns in technical analysis. A noticeable increase in volume as the price begins to rise from the second bottom indicates that the pattern is forming in a healthy manner. This supports the idea that interest among market participants is increasing and that confidence is being restored. If volume begins to rise gradually at the current price levels, it could be a strong sign that the upward move will be more sustainable. On the other hand, following the attack from the second bottom, the first target for the price is usually the neckline located in the middle of the pattern. This level may also have served as resistance in the past, and the price might initially struggle to break through it. However, what matters most is the strength and conviction of the move toward this area. A strong and high-volume attack will make it easier for the price to break the neckline and continue toward its upward targets. From an investor's perspective, the second bottom can also be viewed as an opportunity zone. Buying at such levels can offer a favorable risk-reward ratio, as the risk is limited near the bottom, while the potential reward becomes significant if the pattern completes. This scenario is especially appealing for investors who rely on technical analysis. Looking at past price movements, similar W patterns have proven to be highly effective, often resulting in significant price increases once completed. The Vortex indicator is a highly effective tool for analyzing the directional strength of the market and offers significant advantages to investors, especially in identifying the starting points of trends. This indicator consists of two key lines: the positive directional movement line, usually shown in blue, and the negative directional movement line, typically represented in red or another color. The relative position of these two lines helps us understand which direction the price is gaining strength and what type of movement may likely occur in the future. In the current market structure, it is observed that the positive blue line is positioned below. However, recent price movements and signals of increasing momentum indicate that this line is on the verge of an upward move. If the blue line crosses above the negative line and holds above it, this would be a significant sign that buyers are regaining control and that prices are likely to enter an upward trajectory. In such crossovers, prices often experience not only a short-term bounce, but also the beginning of a medium to long-term uptrend. This interpretation of the Vortex indicator has proven to be accurate when looking at similar chart patterns in the past. At the beginning of bull markets, it has often been observed that the blue line breaks upward, followed by significant price increases that yielded substantial gains for investors. A similar setup is currently being observed. The upward slope of the blue line suggests that the price is starting to gain strength, buyers are entering the market, and a potential upward momentum is forming. The Vortex indicator reveals trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.